The Federal Reserve was founded a century ago to bring stability to our nation's financial system during a time when bank runs were common. Here's a look at the Fed over the past 100 years. President Wilson signs the Federal Reserve Act, sponsored by Carter Glass of Lynchburg, Virginia, on December 23, 1913. Almost a year later, on November 16, 1914, the 12 regional reserve banks open. George C. is named as the first governor or president of the Richmond Fed. The bank's Baltimore branch opened 4 years later in 1918. Women across the nation celebrate as they gain the right to vote in 1920. 7 years later, the bank's Charlotte branch opens. In October of 1929, the U.S. stock market crashes. The Federal Reserve allows the money supply to contract, resulting in deflation, and the United States enters the Great Depression. Between 1929 and 1933, 30% of the nation's banks fail. Unemployment soars to 25%. The Glass-Steagall Act in 1933 creates the Federal Deposit Insurance Corporation and separates commercial and investment banking. The same year, Prohibition is repealed. The Banking Act of 1935 restructures the Federal Open Market Committee. In 1936, Hugh Leach is named the bank's second president. The U.S. enters World War II in 1941. The Fed supports the war effort by helping the government borrow at low interest rates. The Bretton Woods Agreements in 1944 create the monetary system of fixed exchange rates, the International Monetary Fund, and the World Bank. The following year, World War II ends. The U.S. experiences a brief but severe recession. Between 1945 and 1969, the U.S. enjoys a long post-war expansion, with mild recessions in 1949, 1953, 1958, and 1960-61. The Employment Act of 1946 sets goals for national economic policy, including monetary policy. Segregation in the armed forces is abolished in 1948. The Fed Treasury Accord of 1951 lets the Fed pursue independent monetary policy. William McChesney Martin, Jr. helps broker the agreement. He becomes the Fed's longest-serving chair, at the helm from 1951 to 1970. Also, color television is introduced. The Federal Reserve System Telegraph and Switching Center opens at the Richmond Fed in 1953. This automated system enables quick electronic transfers of funds across the U.S. The next year, the U.S. Supreme Court outlaws school segregation. The Bank Holding Company Act of 1956 affirms separation of banking and commerce. The Fed gets new supervisory responsibilities. Edward Wayne is named the bank's third president in 1961. In 1962, the first high-speed reading and sorting of checks takes place, and Richmond gets its first computer. Aubrey Heflin becomes the bank's fourth president in 1968. The next year, the world watches as the first man walks on the moon. The first ATM is used in the U.S., and the Fed's Communication and Records Center opens in Culpeper. During the 1970s, the U.S. experiences stagflation, with high rates of unemployment and inflation. Questionable monetary policy and energy shortages caused the Great Inflation. The gold standard is abolished in 1971. Bob Black becomes the bank's fifth president in 1973. In 1974, amid the Watergate scandal, Richard Nixon becomes the first U.S. president to resign. The OPEC oil embargo causes high prices and long lines at gas pumps. The bank's regional check processing center opens in Columbia, South Carolina. The next year, the Vietnam War ends with the fall of Saigon. The Social Security Administration offers first direct deposits for benefit payments over ACH. Another regional check processing center opens in Charleston, West Virginia in 1976. The Community Reinvestment Act of 1977 requires banks and savings and loans to address community credit needs. The Richmond office moves to a new building on East Bird Street in 1978. The Fed works with the industry to implement a national ACH system for payments clearing. The Humphrey-Hawkins Act requires the Fed to promote goals of maximum employment, stable prices, and moderate long-term interest rates. By 1979, inflation reaches nearly 15%. Newly appointed Fed Chairman Paul Volcker pushes a restrictive monetary policy to curb inflation. The Monetary Control Act of 1980 requires reserve banks to charge fees on payment services and recover costs. The savings and loans crisis begins in the early 1980s and ends in the mid-90s. More than 2,900 banks and savings and loans ultimately fail. After a severe recession, the Great Moderation starts in 1982 and lasts until 2006. The longest period of economic stability in the U.S. since World War II, only interrupted by two mild recessions in 1990 and 2001. The new Baltimore office opens on South Sharp Street. Culpeper is established in 1984 as a contingency processing center and closes 11 years later. In 1985, the U.S. Supreme Court upholds regional banking companies. Alan Greenspan becomes Fed chairman in 1987. In 1989, the new Charlotte office opens on East Trade Street. The Berlin Wall falls. 2 years later, the Soviet Union collapses. That leads to the opening of Eastern European markets. 1991, Operation Desert Storm. In 1993, Al Broadus is named the bank's sixth president. The Regal-Neal Interstate Banking and Branching Efficiency Act of 1994 makes interstate branching possible for the first time in 70 years. The number of checks paid in the U.S. peaks at 49.5 billion in 1995. To deter counterfeiting, in 1996, currency undergoes its first significant redesign in 67 years. The Gramm-Leach-Bliley Act repeals the 66-year-old Glass-Steagall Act. This lets banks affiliate with securities and insurance firms within financial holding companies. The world survives Y2K. As we enter the 21st century, banking in Charlotte grows. The bank's supervision office in Charlotte expands from 12 employees to more than 100. After the 9/11 terrorist attacks, the Fed supports our nation's critical financial services. Electronic payments exceed paper checks for the first time in 2003. $44.5 billion in electronic payments to $36.7 billion in checks. The next year, check processing operations close in Richmond, Charleston, and Columbia. Jeff Lacker is named the bank's seventh president in 2004. 2 years later, Ben Bernanke is appointed Fed chair. The global financial crisis erupts in 2007, followed by the Great Recession, the nation's worst economic period since the Great Depression. The FOMC cuts the federal funds rate effectively to zero in December 2008. Barack Obama makes history in 2008, becoming the first African-American elected president. As check usage declines, check processing centers in both Baltimore and Charlotte close in 2009. The Dodd-Frank Act of 2010 expands the Fed's regulatory powers. Richmond's Fed Experience exhibit opens. To promote transparency, in 2011, Chairman Bernanke holds the first post-FOMC press conference. During 2013 and 2014, The Fed is commemorating its 100th anniversary, and while much has changed since the Fed was created in 1913, one thing remains the same: our strong commitment to maintaining confidence in our nation's monetary and financial system. We look forward to serving the American public for the next century and beyond.